TGIF, everybody. Hello, Cheryl. Nice to meet you. Thank God I found ForexAnalytix. Anyone feel like that? Or thank God I found FaZe? I feel that way. Hello, Shahab. Everyone doing okay? Hope you had a good week. Mine was mixed. We have a holiday here in the U.S., Labor Day. Gary agrees with me. Okay, so it's the last big barbecue. Hi, Sean. Last big barbecue weekend. So I want to start off with the S&P. So before this happened last week, I thought that we had to take out the stops over these highs. But then after this happened Friday, I mean, this big break that held into Monday night, I think it was mainly. Now we've done it. So a lot of the 61.8 guys are gone. And this is pretty important now, what happens from here, because you could almost call it an ascending triangle. And, you know, the bulls could say we're breaking out. Next week's going to be so critical with, you know, the majority of traders coming back from their summer vacations as to whether or not we have follow through on this. Because if you measure this, what's this low? Call it 725. 20, that's that right? 2777. So call it round numbers, 170 point range, this formation. And if you take it from here, that's going to measure to 3100. Actually would take you into new high ground. And most likely the megaphone will be tested again up here. But we could also fail next week and then break down, and 177 from here is going to take you to 2670 or down here somewhere. So I'd say that a lot of the shorts are gone now that thought they had a victory early in the week. So that it's real critical next week's action to see if the market could get follow through or not. But one thing for sure is, you know, there were plenty of stops here. Okay, I mean, people say, well, how do you know where the stops are? And I go, well, just imagine that you're short, you know, when we're here, where would your stop be? And, you know, be here. And that's where everyone else's is. We're also attacking the 50-day moving average here. So it almost looks like the 200 and the 50 are pinching like bully bands do. So next week's going to be pretty interesting to see what kind of follow through we get. Who would have thought last week with this close in the dollar as well that we'd be up here pressing new highs? So the bears could say, well, we're 78.6 back again up here, and that we're going to fail and not make new highs. It almost seems like the dollar, and I think we've diagnosed it now, that the market likes a strong dollar, because this was the S&P sell-off, dollar sell-off. S&P recovered, dollar recovered. Everyone see that? The weekly chart? Sure. It looked a little weird to me on the weekly. Yeah, the weekly looks like, you know, we could attack this again. And, you know, it's possible. I'm hearing a lot of people. There are a lot of bears, okay? Considering how much I could understand there being a lot of bears here, you know, at the end of the year. But I think there are as many bears out there now with most of the sentiment surveys as there was down here. And when you think about it, we're one good week away from new highs. I hope that helps you, Forex Gal. So, you know, to me, it doesn't look like I didn't short it this week. I didn't buy it this week. In fact, talking about barbecue season, I was on the grill in the silver. And I just want to point out that now we've traveled back inside of this megaphone. And, you know, we did that here and had a throw over, and now we're back underneath it. And again, this is going to be pretty critical too. Maybe if the market's going to rally, precious metals make new highs. Look at the weekly in the end that, you know, a lot of people are pretty bearish, and I'm not saying they can't pull back, but, you know, it's a pretty good week. Nice weekly candle. But again, with this kind of trading that we've hit this week without a lot of participation, next week when the volume comes back, I think we're going to have a better idea about a lot of things. Let's see what else. Euro pound is not going to turn up because the off number was 91.30. So, you know, it's tried to stabilize here. But, you know, it doesn't look great, and the euro doesn't look great. So, you know, maybe this is 1, this is 2, and we still get another break in euro pound. I mean, there were some good trades from 91.30, which, you know, was a breakdown. And as you can tell, you know, this spike here, it really didn't negate the breakdown here. So we're still closing under the 91 level. 91's important. 91.30 was important to me. What kind of week did we have? I know we're lower on the week. Yeah, it's done nothing right. Okay, so there's still room. I think Steve said 89.50 or so is very critical to him in the euro pound. And definitely gold didn't have such a great week. I mean, from where it started out Monday, we're basically unchanged. And the big trade, really, if you're a precious metal trader, was a short, which you could go look at Steve's chart of the day. And before he left on one of his 10 vacations in the month of August, he showed that we could break down. The original thought was A, B, C, but then when silver really started to tear, here we are. Blake showed an this chart and has some type of trend line coming in, not too much lower than where we are here. Pretty ugly week. So, you know, you can't say, oh, you know, the gold silver ratio is about to turn, because except now you're getting divergences on the 4-hour. You have divergences on the 1 hour, pretty good ones setting up. So maybe next week is the week for silver to finally catch up a little bit with what gold has done, because gold was a safer short, which is something I did Sunday night, and then I moved over to silver. So I still think this megaphone formation is valid. I'd be pretty careful being long silver up here, because if it fails, I know a lot of people are looking for a buy zone at 1750. There's a gap here, but if the dollar's going to scream to new highs, why can't we see 1550? I mean, that wouldn't change the outlook at all. I mean, this was your falling wedge right here. You got a wedge. I mean, when I was constructive and bullish, my target was like, you know, 16 bucks up here. So even a pullback to 1550, that's a breakout. But that's pretty extreme target. Silver had a great week, but I'd be careful being long up here. And I think that's about it. I don't know what to do with oil anymore. Still a descending triangle, but now we're threatening maybe an upside breakout next week if we can get through here. Oh, look, Dale, here.
So you do know what to do with oil?
Nothing.
Exactly.
Yeah, I know.
That's also the position, right?
Yeah, it is. And you feel the same way, but we should get some kind of signal. I mean, if we break out here, I think we'll go up here, Steve, at least to check.
No, I agree with you, but we remain in this. It's still quite a big range, like 50-50 to 57-50.
Yeah, that's a big range. It's a triangle.
Yeah, I think in between, the only thing you can be doing is, if you're not expecting a breakout, you can sell near resistance for another move lower. or buy near support if we make it there for another move higher. There's nothing else to do in the range.
I think there's a big fundamental event next week. Isn't there an OPEC meeting or something Monday?
To be honest, I'm not sure, but
Yeah,
I couldn't.
I think I heard that. There's some.
I couldn't really care less because we've had events like this produce nothing in terms of price, and
Yeah.
we've had non-events produce a lot of price volatility. So ultimately, the market and the price is going to determine what matters and what not. And we can judge from that, because don't forget that even when we have some like big fundamental news, it is quite frequently that has happened in the past, especially if we're talking about crude, that we get some kind of a spike after an announcement, and that is the last move that we get in that direction of the trend, and then you get a big reversal.
Yeah, and one thing you could say, the recovery in the S&Ps, if you correlate these two, has been much more impressive than crude. So if the S&Ps do follow through to the upside, I don't know what you're thinking, Steve.
Usually, it's a good correlation. Yeah,
it would at least take it back to here, I think, if S&P has made new highs. So it's a nothing. It's a lot of action in thin markets, but let's face it, that a lot of this action that we've had this week has been markets moved around by algos. Not that they don't every day, but they had more impact with lighter volume than they will when the markets become deeper next week. So with that being said, I have deep gratitude for working with you guys, and another week in the books, and wake me up when September ends. That's Green Day. So September, I'm looking forward to it. Change of seasons, college football's on. Want to thank everyone here that hangs out with us in face. Hope we've accomplished our mission again this week, which is to edify and build up traders every day. And we're looking forward to helping traders out during the month of September by giving you our best every day. And one of the best I know in the business is Blake Morrow. How about you, Steve?
You'll find no disagreement from me, obviously.
Okay. How do you feel about that, Blake?
I feel that you guys need to stop kissing my butt. Just kidding.
Come on, give me a raise, man.
It's really nice. I'm gonna say that I am nowhere near the best in the business. I've seen.
I said one.
Somebody had, one of our listeners, Alex, he follows me on Twitter, and he recommended that I, what's his name, was looking for market wizards, like trader or somebody to interview. And I'm like, I'm not the guy. I'm a trader just like you guys, and I make mistakes. I'm human. I know some traders that are like ridiculous, just ridiculous. And it's more their methodology, and it does, like, to me, I trade, and I move some money, but I just know some guys that are methodically. It doesn't matter about the dollar amounts that's used are just much better.
They're machines.
They are, and like I said, it's not the amount of money, it's the methodology that they use. And I still gunsling it every once in a while because I'm, after 20 some odd years, I'm still, polishing what I do, but some of these guys are just so damn good. But anyway, thank you. I appreciate the compliments. It's nice.
I tried.
Hey, and I'll take it, but I am happy to report that this month has been my best month of the year. But that's not saying a whole lot. Thank you. That's not saying a whole lot. This has been a tough year. And so just so everybody understands that,
well, it is saying a lot, Blake. A lot of people are trying to get even.
Yeah, I think a lot of people might be trying to get even. I personally, we've kept as a firm, we've kept our head above water, but more importantly, it's like, you know, staying alive during this year has been hopefully, you know, easier for you guys to do with us. And that's been my whole goal this year is just, I just got to weather this storm. And I've been through plenty of storms in the markets and trading. But this one was a good one. This one was the king daddy that I've seen of low volatility. And you know, and actually the euro dollar probably says it all. I mean, if you look at, you look at this year's price action in the euro and just take like the last, you know, you can go almost a full year, just go like, right. You can actually go a full year, just really, just do that.
300-400 pip range.
Yeah. In the euro dollar. I mean, we're talking, you know,
most of it.
Cancel. Hold on. Let me do this.
You know, Blake, I stand by a Pinkertism. The difference between pros and amateurs are pros know how to lose, so they have money left to be right with.
You know, and that's very true. I believe that. It's like you have to, when you know, you've heard us all year long talk about the low volatility, and this is the time where you just have to survive, because these volatile times that you see, and I'm pointing out just the euro, and you're seeing just that this is 12 months. This is, you know, a year ago to where we're at right now. And you're right. I mean, you could say, well, that's 800 pips. It is, but it really has been just a really tight. I mean, this would be from this year, you know, 115 to 110. That's a 500 pip range, and it's grinding lower. But, you know, for people to go, oh, I've been a dollar bull this whole time, I mean, that's a tough trade. And like, oh, I'm, you know, and if they're doing victory laps, you know, that's a tough trade. And you know, because I've been predominantly a dollar bear for this entire, you know, calendar year of 2019, and I've made money, and I've been predominantly a dollar bear. And you know, trend wise, you could say, well, Blake, you've been wrong, but you know, obviously in this move, you can make money in both directions, but you have to, this has been the market where we're not looking for home runs. We're looking just to take, you know, bits and pieces off and out of the market when you can. And that's exactly what I've been attempting to do. And I've succeeded to a point where it's not, you know, like I said, it hasn't been a great year. It's actually been probably my worst year of trading for years, but I am still ahead. And I was trying to explain this concept with the folks in our chat room. Like I trade for a firm, and I've been trading for this firm for basically a little over 3 years now. I have to perform. There's no like, oh, you're down, and we're going to just keep you on. That's not the case. When you're trading for someone, you have to perform. And so I've been performing, and it's been tough, but I'm happy to report that this month has been my best month of the year. And I think it's going to increase, not necessarily saying my profitability. I think that the volatility is going to increase from here on out. So if you guys have made it this far and you have managed not to, you know, blow up. Yeah. Then I want to applaud you. I think, and I said this, I think last week or 2 weeks ago, I think you guys are doing great, because if you can survive in this market environment and either A, make money, or B, not lose too much, then you're around for what I think is going to be a really great fall. So I know I with Steve and Stelios, we built ForexAnalytix, and for me, it was more of a landing place for the people that had been WiseTrade customers for years, and we needed a community and a place to chat, and that's predominantly why I wanted to build it. And it's been something that's been wonderful, because it's helped a lot of traders along the way. And I would say that, hey, make sure you join our community, you know, when you can, and join the ForexAnalytix community. But I'm going to also say that if you have been on the fence about joining ForexAnalytix, why don't you wait for a couple of weeks? And Steve's probably like, what? We have our beginning of season special coming up here in a couple of weeks. Our seasons are different, right? Trading season really starts like here in the next couple of weeks. So the offer that we will bring you will be a nice savings. So you might want to wait a couple of weeks to get involved. But when we do offer it, it's only a very short period of time. So you want to make sure you jump on it. Anyway, I'm done saying my piece. Oops, what happened? I just didn't. I hit something on my. Can you still see my screen?
Yeah, you're showing the website.
Okay, I hit like my Windows taskbar and my Bloomberg disappeared for a minute, but it all came back. It's like weird. So when my mouse went a little bit too far, and if you guys don't know, I've got like multiple screens here. So anyway, let's talk about today's price action. So by the way, I've got a short in the dollar Swiss. I've been short since yesterday, and it's a small piece. I'm thinking about adding another piece now that we're up against this trend line. I actually did buy the New Zealand dollar last night when we were down below 63. And if you don't know why, because 127% extension of this move, 161% extension of this move, 161% extension of this move. So big confluence down here at 63 cents all the way to 62.70. So I bought it for more of a counter trend trade, and obviously I'm kind of fading these moves that you see here right now, and it's mostly due to, because I think that all this end of month data is all flow driven. Okay, so that's why we're seeing just flows come through that are selling the dollar, or excuse me, buying the dollar, selling euros and everything else. But I think that we're going to see that dissipate throughout the day, I'm hoping, and we get a little bit of a reversal here in the Kiwi, maybe back up towards 63.20, 63.30, and the euro dollar. I'm not long yet. I had a limit order to buy it at 110.26. It didn't get tripped. I already canceled that order, but I think there's still risk that we dip down to just test these lows down at this, this descending wedge support before bouncing. I am surprised how weak we've closed, how weak we're going to close the euro, more than likely, how weak it is. If you're long, I would be a lot happier being long if I was long on a close back above this 110.70. And we have data coming out today. So just, if you look at the data that we have coming out, we have, and I'm going to go through I'm going to go through Canada here in just a second, but we got the PCE. We have personal spending, personal income, some consumer confidence numbers coming out. So we might get a little bit of movement in the dollar as a result. But I think we got to watch the Canadian data that comes out. We have Canadian GDP coming out in just a few minutes. I do not have any Canadian exposure because I've not been trading this, but a couple things we need to look out for. And one thing that I should note about the Canadian, you kind of have to be positioned in the Canadian ahead of data because it just gaps. When the data comes out, if the GDP number is above or below expectation, and let's say it's a little stronger than expectations, the dollar Canadian is just going to gap down to it's going to gap down 20, 30 pips real quick. Or if it's weaker, we're going to gap right up into resistance really quick. So it's hard to catch if you don't have any, I don't have a strong bias, so I can't just, I think it's more of a crapshoot at this point for me. But one of the other things that we got to keep in mind is, there's still the USMCA possible passage too, that could move the market as well. And I think that would be Canadian positive. So that's something that we should all be thinking about as we head into the end of the week with the Canadian. And like I said, I don't have any position here in the dollar CAD. I just think that the risk of a gapping move is quite high, especially, everybody's looking at GDP numbers, and everybody that's in the market right now on Friday in front of their computer is looking to prey on something that's moving, because nothing's really moving aggressively. So the Canada is going to be front and center and on everybody's radar this morning going into data. I know our entire office is in Greenwich, Connecticut, is focused on the Canadian right now, and I think a break above 133.35 or a break below 132.50 is going to yield us probably a little bit bigger move. Unfortunately, we are smack dab in the middle of this range right now. So, trying to figure out which direction it's going to go. I think you got to, it's like I said, it's more of a roll of the dice than anything. A couple other things I want to point out really quick before Steve gets, I turn it over to Steve. And I'll sit here, Steve, with you during data, but I just want to point out that the yen pairs are failing despite the rally in risk. So you've had this rally in the S&P, and we're up against, obviously key resistance right now. We're just knocking our head against this 29.50, big resistance up here. The dollar yen can't break higher. The euro yen stalling at resistance here. I took my euro yen off earlier this week for like a 25 or 30 pip loss. I can't remember. I bought it hoping that I knew that stocks were going to rally. I felt that stocks were going to rally, and I'm like, okay, well, the euro yen's going to follow suit. It didn't. We knocked our head up against resistance and came off. Pound yen in a triangle. Aussie yen didn't break the channel. Kiwi yen didn't break the channel. Canadian yen didn't break the channel. Now, the Canadian yen obviously can today. If we have strong Canadian data, this could risk a upside break. But what I'm trying to say here is the lack of participation in the currency market, it's got to be a little concerning for a couple reasons, because if stocks do pull back from this resistance that we're at, what happens to the yen pairs? I think the yen pairs could really come under assault early next week. That's just a little bit of food for thought as we go into the data. So speaking of the data, I want to welcome Steve. Steve, how's it going?
Hey Blake, I'm good. How have you been?
We have a crap ton of data coming out here.
We do.
Okay.
US and Canadian, as you said.
Yeah, let me move that out of the way. I'll pull up the dollar CAD. I think that should be our focus this morning. Here, there's the data flash right there. If you guys want to see what it looks like on Bloomberg as it's getting released, there's a Bloomberg. You can. I would look at this. Their quarterly GDP expected at 3%, month over month, 0.1%, year over year, 1.4%. Prior readings right here. So just you watch that data, and then obviously we have. If you use ForexAnalytix, you get the data flash as well, which is a wonderful tool. If you don't have the $2,800 a month to spend on Bloomberg, you get this with ForexAnalytix with your subscription. So it's really a great feature that that Steve had the development team integrate with. So hope you guys enjoy it. All right, so let's wait for this data. You'll see how quickly this all comes out compared to Bloomberg.
What a great website.
ForexAnalytix is chock full of tools that we hope you guys as traders could really, things that you can use that'll really help your trading without spending $2,800 a month. You have. Go ahead, Steve.
Since you've already produced a spoiler, and let me just say that in a couple of weeks, as you mentioned, we're also going to release a version of ForexAnalytix for people that have lower budget, which is going to include all those tools. Not everything else, of course. So people will have a great value proposition.
We'll call it ForexAnalytix Lite.
Yes.
So, yes. Hold on. Data's coming out. Stand by.
10 seconds.
Lower calories.
Lower calories. That's ForexAnalytix with balsamic vinaigrette.
If you're on a diet, you go that way.
Oh, wow. Look at that strong data. Boom, 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 boom.
Man.
Wow.
Oh, yeah.
Now we know why they're not easing.
3.7% annualized GDP.
Oh, God. Our president's going to be pretty jealous of this number.
So there goes the dollar CAD. We're right into support here. Let me move over to Bloomberg. We don't need that right now. Let's see if this dollar Canadian will push this support. This is trendline support comes in at 32.40. I don't know if it's going to be able to do it on a Friday, man. I kind of doubt it will, but you know, you got all these and like I said, I have zero exposure here. What I'd probably consider doing is selling some dollar Canadian back up at the 70s if I could get it, but yeah, it's a tough trade to trade right now, knowing that support's right there. Well, anyway, I'm going to pass it over to you guys so I can get back in front of my screens and see if I can do a little bit of productivity on the last day of the summer, August.
Risk all your profits today.
Yeah. That's no, I'm chipping around. Let's put it that way. I'm chipping around. I'm not driving today. I'm just chipping for all of you guys that are golfers.
1,000 lot and something.
By the way, we have a friend here saying how about a mobile platform. Blake keeps repeating that on the week ahead video every week. So I'm assuming you're not watching that. You should be. It's free. We do have both mobile phone applications free. You just need, of course, to have credentials so you can log in. So you need to be a member, and tablet version of a platform.
Yeah, and it's right. If you go to our website, and you know what's really cool about that, and I'm going to tell you personally, I rely a lot on my mobile app when I'm out on the road. Because I probably spend about 12, 13 hours, 15 hours in front of my computer. The other times I'm usually at sport events for my kids. I'm or maybe out to dinner or something. My mobile app, the alerts that I get when currencies hit support or resistance levels, or there's a new update, from analysis from like Andre or Grego or Steve. I really, or Paulie even, I rely on those because, when you're on your mobile device, it's hard to actually look at charts and draw them and make decisions. But when you get analysis or updates that something's moving, it's so beneficial. And that's why, you get the mobile app is included with your ForexAnalytix.
And Blake, we're all family here. You could tell everyone you take your tablet to the bathroom with you.
I do. I do.
All right. So
I do. I admittedly do. Yes. All right, guys. Hey, have a good one, Steve. It's all yours. You guys have a great one. I'll see you. Remember, we're not broadcasting on Monday. Monday is a holiday here in the U.S. It's a big one. It's Labor Day, but we will be here Tuesday, full force with everybody. So have a great weekend, long weekend, and take care.
You too, bro.
You too, mate.
Thanks, guys.
Okay, Steve.
Hey, Coach.
How are you, buddy?
Good. We don't have the suppy.
You take your tablet to the laboratory.
Well, frequently, yes, or a book. Depends. Lately.
Let's ask Face. How many take their iPads to the bathroom? Give me a Y. All right, there's got to be at least one out of all these people that do it. Anyway, it's better than the newspaper.
Quite recently, I try to reduce, my screen time when I'm not sitting in front of my computer. So I've gone back to reading books.
Yeah. Anyway, a lot of people do that. So good, we're not. We're not alone. All right. So,
okay. So any special requests, Dale?
For me?
Where we should...
Yeah. What would, I'd be interested, since you're one of the more patient, disciplined people, what would get you negative silver?
Oh, actually,
and maybe it's already happened.
I might get negative silver even today.
Okay.
in the short term. Let me be
Right,
very clear.
short term. Yeah.
Now we're talking about short-term outlook, okay? Because my long-term outlook was and has been very positive for, you know, real assets, right?
Right.
But if you go to our blog, I did the chart of the day yesterday as well, and it was all about silver. So as you say yesterday, I pointed out here, silver signals that a corrective pullback might be about to start. Silver posted today an outside spinning top after a relentless 3-month rally. What is more important is the area at which we got this bearish reversal candlestick forming, right at the 61.8 fib, blah, 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 blah. If we add to the mix the extreme positioning and sentiment, as well as the diverging behavior of gold reversed on Monday and failed to follow silver to new highs, we have to at least switch our viewpoint from bullish to neutral in expectation of a corrective move lower. I repeat, this is a short-term outlook, right? It's not a long-term thesis, so I don't get misunderstood. Do
you have different position sizing, Steve, in this case? Like, you know, it's not with your major bias, it's just a reaction that you're looking for. Does that affect size for you?
Yeah, but not in the way you might imply. I might even go bigger size if I'm looking for a short-term move and I have an amazing risk-reward.
Okay, so it's a risk-reward rather than the bias, as always.
The risk-reward in combination with, you know, how far away is my stop loss? Because when you're looking for a reversal, in that case, you want to have tight risk, right? So tight risk also allows for high leverage. Of course, don't misunderstand me. I know you won't, but I'm talking about, you know, the viewers.
Yes.
You know very well that I'm not an advocate of high leverage, right? So high leverage for me might mean like a 2-3 times leverage, while I'm usually unleveraged. You know what I mean? I don't mean like 50 times leverage or anything like that. I consider that insanity. You know what I mean? Yeah. Absolutely.
It's amazing how brokers try and sell themselves by offering the highest leverage.
It's really funny because, you know, whenever I see advertisements and they advertise how much leverage they offer, I'm like, who cares? I mean, you know, I would be fine even if they reduced, you know, my maximum leverage to 10 times.
Right.
I wouldn't care the least. You know what I mean?
Well, I mean, that's what I was trained on. I mean, futures mainly, that was it. You know,
I understand.
With about 10% margin on futures.
Of course, admittedly, it's a different story if you're a scalper, because I do understand that you can be, you know, very prudent with your way of trading as a scalper and still need like a 20 times leverage or like, you know, a 30 times leverage. But for my trading style, you know, I'm mostly like a swing trader, you can call it. You know, it's completely irrelevant. Completely irrelevant. I mean, even when I have a lot of positions on because the market might be moving in general, I extremely rarely exceed, you know, with all my positions, like a 3 to 4 times leverage. Extremely rarely. Usually I'm like 1-2 times, something like that. So
yeah, in the old days, margin didn't apply unless you held it overnight. I mean, they might have a deficit stop for you. Day trading, but you know, there was no margin requirement for day trading.
Anyhow,
now
going to silver. Yesterday's reversal was quite interesting. Now, is it confirmed? No, it isn't. Is it invalidated because we have an update today? No, it isn't. Because, you know, first of all, it's early in the day. Second of all, we're still trading within the confines of yesterday's candlestick. So even if we take the example of gold made a nice attempt to reverse on Monday. And if you remember yesterday when we had the webinar, gold was actually like near the highs of the day or whatever. And they said, keep in mind, you know, we're consolidating here. And if we spend more time consolidating near the highs, then we're probably moving higher because that was a short-term, pause from this resistance area. But we still haven't invalidated Monday's reversal because we hadn't gone through the highs. So there is a decent chance that exactly what happened with gold, the fact that it had like a nice daily reversal, then The next day was positive, but never invalidated that. And the next day after that, the same. And then yesterday, initially, on the start of the day, we were near the highs, and look how we closed, posting, in essence, an evening star formation. So, that's an extra signal that gold has really found strong resistance there at 1550. We might see the same deal with silver. Silver is attempting to recover again today, but unless I see the highs taken out, I'm not really, buying into it. I mean, I'm not buying into the fact that yesterday's reversal was, a false signal, because it might as well not have been. So, in my opinion, there is a very decent risk-reward ratio being short silver from here with a stop loss above the highs. Is it a high probability trade? Is it like a 60-70% probability trade? Absolutely not, because, we have obviously had 3 months of a relentless rally higher, and, trend is your friend. But does it offer an amazing risk-reward ratio? Yes, it does. Why? Because in my opinion, if you wanted to be short here, you would have to risk something like 1.something%, looking for a move down towards 1770, which is 3.75%, right? So we're talking almost for a perfect 3-to-1 risk-reward ratio. Now, the question then becomes, are the chances of a reversal here better or worse than that, a 3-to-1? In my opinion, somewhat better, okay? So, I mean, from my personal perspective, okay? So, that's why I like it. That's why I like this, trade, as we speak. Now, do I have a position? No, I don't, but I'm looking to probably building today, as I wrote yesterday late in the afternoon on the chat room, I'm looking to build, to start building a position short gold and silver 1/4 each, and see how that works out. And, if I see silver, reversing the way gold reversed yesterday, then I'm going to add to that. Okay. Of course, as I said, you need, to be quite nimble, and most importantly, you need to take into account that this is a counter-trend trade, and keep in mind that I'm still looking, for a decent pullback, which I would probably use to reverse to long positions. So that's something to take into account. Now, having to do with the rest of the metals, yesterday we pointed out the overperformance that we've had from platinum. Platinum is the best performer today from those precious metals. Now, I'm leaving palladium and copper out because they have somewhat different characteristics, but palladium is also performing amazingly today. I was looking for short positions in palladium, but we haven't yet broken below this ascending channel, so I still have no position here. Obviously, today is quite an intimidating daily candle. I mean, it makes people looking for short positions think about it twice. But personally, that doesn't really change my thesis. So if palladium does get rejected once again from this ascending channel, and it does come lower, and it does finally break below the channel, I'm actually going to be shorting it, okay? Because, my game plan hasn't really changed because we've kept appreciating within this channel. Now, having to do with copper, copper obviously has had some type of a recovery following the recovery in risk, but, in all honesty, it's nothing to write home about, right? I mean, we did reverse from, fresh lows. We didn't make it to, my next downside target, which was at 244, 245. But, is that recovery impressive in any way? Is it impulsive in any way? No, absolutely not. I mean, it still looks very heavy to me. So I think that if we do get another leg lower in risk, which I still consider a very high probability, I think that copper is going to resume lower and eventually make it to that target. Of course, we're covering copper also for, market implications. I mean, a lot of market participants are watching about what is happening with copper. But would I actually be trading it over other alternatives? Not really, because if you've noticed, it's been quite some time that copper has been suffering from the same illness that USD yen has been suffering from as well, which is, yes, it ends up, doing some moves, but, it doesn't really move much. So, if you really want something that, will give you more action, that will put your positions faster in the money, or at least tell you sooner that you're on the wrong side of the market, so you can, move forward with something different, copper is not that instrument. At least it hasn't been for quite some time. Okay, so we started from the metals, but we obviously have a lot more to talk about. Let me have a look.
Someone's asking you about Catherine Ox would like to know about Euromex, Steve, if you have a chance.
Oh yeah, absolutely. The Euro
She's short at the moment and feeling a bit nervous. If you're a bit nervous, are you over leveraged, Catherine? You shouldn't be nervous if you have your stop in and you have your plan, and nervous equals emotional. Capiche?
Let me go to the Euro MXN on the weekly, and I'll tell you why. Because, I've indicated in the daily some shorter term formations, but I think, we should be paying attention to the more obvious. And, this is what I'm looking at here. And yes, I would be very nervous being short the Euro MXN. Very nervous for obvious reasons.
When in doubt, out, Steve. What do you think?
I wouldn't be short.
Okay.
That's what I think. Okay.
Would you be long?
Yeah.
Yeah.
I mean,
all right, go ahead.
I'm a little bit skeptical in saying yes.
All right.
Very easily, and I'll tell you why. My only skepticism here is that I remind you that being long the Euro MXN means not only that you have to be in the right side of the market, you also need to have the timing right. Why is that? Because the overnight rate that the central bank pays for holding MXN is 8%, if I'm not mistaken, 8.25, something like that, oppositely to what is happening with the euro, which is negative. So bottom line, there is a big carry going against you for holding Euro MXN long, which means we know as a fact that the Euro MXN has spent the past almost 2 years consolidating in this probably corrective range, because look at this. I mean, there's no doubt that we had a strong move higher. So there is little doubt that this formation is corrective. So I feel quite, comfortable saying that there is a high probability scenario that the Euro MXN is going to be continuing higher. But if you are mistaken about the timing and we just end up having more consolidation, you keep paying overnight for holding it. Exactly. So, that would make me more cautious about pulling the trigger, because I would need to make certain that now it actually started moving. Then, yes, it's going to be worth it holding it, because it can actually accelerate to the upside. But make sure that you're not holding it while it's chopping around, because you're paying for it.
Great point. Hope that helps, Catherine.
Okay, so that was Euro MXN. As you see, even in the short term, if you look at it, not the larger formation, we also have had a little bit of a breakout from here. Now there is a resistance area at 2260, so take that for whatever is worth it. So let's go through your questions. Zach says, tell me about it. Not the best year, but it's turning out okay. Trading for my office and my account, of course. Thanks for FA effort, guys. It's awesome and helpful. Let's see. Let's end the last 4 months strong. Yes, absolutely, Zach. And I do believe that we're going to have some interesting months ahead. As I've kept saying for months, I think that the period of zero volatility is behind us. we're still going to have, shorter periods of time that volatility is not going to be, that strong. But I believe that we're at the very, very, very last part of that cycle. And, the years that we have ahead, I believe the next couple of years, at least, are going to be very interesting and worth being active in the markets. I honestly believe that. I'm not saying that, because what service we offer or whatever. This is my true belief about, the road ahead in the markets. And those of you that are listening every day, that, I've been saying that for quite some time. And we've already started seeing the signs that volatility has left the, the type of trading. Yeah, has left the station. It's moving slowly, but steadily towards, a new standard that I think is going to stay with us for quite some time. Now, we have some interesting questions about what is happening with the pound Aussie and the pound yen and the pound Kiwi, sorry. And I have to tell you that, first of all, both of them have produced some breakouts. You can see here we're trading within the descending channel. We broke above it. Keep in mind that we've stalled in this confluence of this 50% fib and this horizontal resistance area, 182, 182.20. We've found it quite hard to penetrate through that. So I'm looking to see what's going to happen from here. We've been consolidating. I wouldn't find it unlikely to see another leg higher towards the 61.8. But, given the fact that so far this rebound hasn't proven that it is anything different than a corrective move higher, let me make it, clear on the chart. It can easily be something like this. Let's clone this. Okay, something like this. So, and look at this. This is a megaphone formation that is full of channeled moves. Channeled move lower. I haven't drawn this channel, but you can see that it's a channel. Channeled move higher, channeled move lower, channeled move higher, channeled move lower, rebound higher. So, keep the big picture in mind. The big picture is that we are in a megaphone formation, so in a larger, expanding consolidation. And every move we've seen since beginning of 2018, an elitician would tell you that it's corrective. So, corrective moves within a consolidation, because, consolidations are usually consistent of those. Bottom line, until we really get a signal that something bigger is happening here, you have to, be focused more on, what's happening in the days and weeks ahead than longer term, because longer term, I can't advocate being long or short. We're a little bit higher in the middle of this megaphone formation, so bottom line, directionless. But I can tell you for sure that if you like it at the downside, you have a decent risk reward to trade against. This confluence of resistances, as I mentioned, and if we do break this channel to the downside, then I think we will have started a move that will take us closer to this formation's support, perhaps retesting the previous low or whatever. Now, within the confines of this channel, as I said, it's not unlikely to see something like that first, right? So, keep that in mind and, trade it according to, your trading style. As you'll see here, the pound Kiwi has some different characteristics, but bottom line, the main issue here, which is we've had a period, you can call it a prolonged period of consolidation. In this case, it was in a large ascending channel. I mean, we've been forming this channel since summer 2016. We briefly broke below it, which was like a false bearish signal here, but we quite fast recovered to go back within it. And currently, we seem to have stalled at a very nice confluence of resistances. It's the 61.8 of the last move lower. Also, horizontal support resistance area. So, same deal here with the pound Kiwi. Pound Kiwi has recovered somewhat. The recovery doesn't look impulsive, for now, and it's attempting again and again to break through this resistance, so far unsuccessfully. Okay, so decent risk reward being short here as well. let me go to some other. Also, check Bund, USD ZAR. Sure, Bund and USD ZAR.
And then maybe you could wrap it. Vlaja would like your look on Aussie USD.
Absolutely. Okay, USD ZAR looks like a triangle to me here, which means very likely scenario, at least one more leg higher. So USD ZAR looks quite strong. We did break out some time ago from this clearly corrective, move. I mean, corrective characteristics all the way around. Look at it: choppy, overlapping, slowly depreciating. Then we broke higher, and since I'm not really impressed with the way we have been moving higher, with the exception of the move that started actually in July, because this leg higher has been somewhat impulsive, and I do think that this triangle is probably going to break to the upside. But be careful, because triangles are usually, terminal formations. So we might reverse after posting a new high, perhaps above this 1569 previous high. Now, having to do with the bonds, it's a good opportunity for us to have a look both at the bonds and the US Treasuries, because we haven't had any look at them this week. I was away for 3 days, so I'm not really sure, to be honest.
I called Guinness. You broke the record for vacations in August.
No, you would just gather up our vacation days for August, because it's treasuries. First of all, treasuries are still above this ascending channel. So they're still overthrowing this ascending channel. There is clearly a loss of upside momentum. I mean, we haven't seen any decent move higher, but nobody can refute that the trend remains higher. So it is what it is. Same deal with the bonds. Bonds, this was clearly, I marked that like last week, this was clearly another corrective move lower.
Yeah.
Initially, we got those two nice downside days, and then I started believing that finally we might see like a decent pullback. But once, another 2-3 days passed, and I started seeing, the way that the bond was depreciating, it was more than obvious that that was another short-term move. Keep in mind that if we want the fundamental expectation, I've been reading again and again the articles that come out on media. I read quite a lot the Financial Times. As you understand, of course, I take everything with not just a pinch of salt. More than that, I mean, I'm very critical to the way reporters are reporting stuff, and usually I laugh with it. But it is enough to give you an idea of what is actually happening by focusing on the parts that you need to, or reading between the lines. So one thing is for sure, there is a big debate with what is the next thing that the ECB is going to be doing. And the market has high expectations having to do with fresh stimulus coming from the side of the ECB. Today, for example, I was reading an article how different members that have some chance of being the head of the ECB following Draghi, how they're thinking and what kind of new stimulus they advocate for, etc., etc. But one thing is for sure, the market has high expectations having to do with fresh stimulus from the ECB, and it's more likely than not that we are getting stimulus. So, the bonds, I don't think they will be easily selling off until that happens. I think there is a good likelihood that we might see some type of a pullback as a buy the rumor, sell the fact. So when we get the next ECB meeting, if the market, which is a likelihood, is underwhelmed by what is planned there or what isn't planned there, I think that then the bonds might actually start a corrective move lower. Prior to that, I would be quite careful, as you see huge uptrend following a multi-year consolidation, and we remain within an ascending channel. And as I told you, we just broke above a short-term consolidation. So nothing really here tells me that you should be shorting bonds, right here, right now. I mean, yes, there is a decent risk reward against the highs, but the price structure tells me that probably we're going to take them out. I mean, very high probability scenario. What did you ask for? Aussie, USD?
And then then Jane has asked, Steve, do you think China tariffs have been priced in? Do you expect further downside of stocks if Trump goes ahead with the tariffs on Sunday? And if so, do you expect gold, silver to retrace?
Tariff. It's quite a complex question to answer, and I'm gonna tell you why. First of all, the question is, are tariffs the problem that the U.S. economy currently has? The answer is no, they aren't. In my opinion, they are the tip of the iceberg, literally the tip of the iceberg. Now, the market, though, to be fair, seems to care a lot about them, like they actually matter hugely. They matter, but they don't really matter, that much. So no, I don't think the tariffs have been fully priced in. I think they've been priced in from some parts of the market, meaning have they been priced in from bonds? A lot more than from stocks, I can tell you that much. So as always, if you want to see a delayed response to bad news, that's going to come from stocks. There's no question in my mind about it.
Thank you.
Because the stocks are always buying the rumors, because we're in a bull market and we have a lot of passive bid coming through, from all those funds, etc., etc. So good news immediately provoke buying, while bad news always somewhat hit the market as a surprise, which they aren't, but that's how the market reacts to them.
Where are you at on the S&P, Steve, with those finally taking out the 61.8, clearing out the stops? Is this a sell zone to you, or do you think we're going to make a move?
Absolutely. I think nothing has changed here. I mean, 2960 remains a very decent resistance area. And, taking out the stops is something that I'm pretty sure hasn't surprised you, because it definitely didn't surprise me, right?
Well, after Friday's close, I wasn't sure, but...
no, I agree with you. But, I mean, as a general...
Now the 61.8 players are out, so maybe we go to 78.6. We might.
2960 to 2973. Yeah, why not?
Or new highs. No, you give that a very low percentage, new highs?
Very low percentage. You can never give a very low percentage in a bull market to, that is like 4%, 5%, whatever it is, away from, all-time highs to make a new high. So no, I wouldn't say that. But if you're asking me from a personal perspective and as a trader, I still give more than 50% chance that we're going to move once more lower before we actually go to new highs.
Okay.
Yeah.
That's the answer I was looking for. Okay. Thank you, buddy.
And, we have a friend here asking for the DAX, and I'm going to cover the Aussie. Do you have your guest here?
There is no guest today.
Oh, good. Good in the sense, I mean, that, I'm not pressured by time, so I can cover both those.
Yeah, Steve will be covering the markets for the next 2 hours. Stick around. He has a lot stored up, pent up from his 10 vacations.
So I gave you a freebie yesterday having to do with the DAX. I told you very, very clearly that a break above 11,840 would extend. So, if you took that trade, I even showed it to you as an inverted head and shoulders formation. I told you to be careful, because frequently inverted head and shoulders formations are just masquerading triangles. But once we did break the neckline, which was at 11,840, also horizontal resistance area, you can view it, as I was saying yesterday, also as a range, then you knew that, this market would extend higher. And if you remember, I said that, listen, if I was to be long something, I would choose to be long, DAX or even the FTSE, and not the US indices. And they have indeed overperformed since yesterday. So, the DAX has broken out, and, the implied target from this is 12,250, something like that. So, there's nothing more to say about the DAX. than that. And here is the FTSE that also, made its move, right? So yeah, I mean, they look decent in the short term for a big rebound. If you traded the breakout, now you just have to manage, your trade. What was the other question? Oh, the Aussie.
Aussie, yes.
The Aussie. So let's have a look at both the Aussie and the Kiwi, since we're going to go to those markets. So Aussie. Now, you want the good news or the bad news? Good news, if you want to be bullish, is that we've definitely stalled here. Okay. Now, what kind of a thing is this? Is it triangle? If we take into account the wicks, yeah, this can be a triangle. If it is a triangle, look lower. No questions about it. Okay, triangles in the vast majority of the cases get resolved in the direction of the trend, and that would be lower in this case. Regardless, if we do break above 68.30, then that is a technical event as well, and that is a bullish one. So bottom line, keep your eyes on this triangle. A break below support, I'm pretty sure will extend, at least equal to the size of the triangle, the height of the triangle in this case, which is, 160 pips. So I would expect another 160 pips of downside, more or less. This view goes to the garbage can if we break above 68.30, in which case look towards the 61.8 next, which is at 69.30. Okay. So until that happens, what do you want me to tell you? Buy it or sell it here, within this formation, it would make no sense. Now, Kiwi, of course, totally different story here. Kiwi continues to underperform. It keeps drilling for oil, having to do with the RSI. Blake mentioned very correctly that the Kiwi hit two different extension targets yesterday, and he bought it. There is another target that I have here at 62.76. One thing is for sure: you want to be short the Kiwi. It makes no sense being short here. It's already, severely oversold. This was the place you should be short Kiwi. I mean, we had marked that formation. I remember it was here. Yeah, that day was a Friday. I remember because I wrote the end of week analysis. So, that week that we closed below this formation, I wrote that, the Kiwi is breaking down and now you should be looking lower towards 64.25, which was this horizontal support resistance area, because, it was obvious. The rebound was corrective. We had been breaking below it. So, that opened the door for more weakness. Now, want to be short here? Okay, sure, yeah. You can make some money because it can sell off even more. But where would you put your stop loss, right? I mean, makes no sense. One thing is for sure, if you also remember, when we were breaking above this one, I said that, listen, with the price action we saw the last couple of days when we had that false break lower to new lows, and then, that amazing recovery higher, looks like the Aussie Kiwi is going to be performing well for at least a period of time, in order for us to get one more leg higher, and that has been the case so far. So Aussie Kiwi still looks quite healthy here.
Good call, Steve. That was a very good call. That was a hard candle that was a hard trade to catch near the lows. You had to, your style was wait for the confirmation because there were two central bank meetings back to back. One cleaned out the stops and the other one turned it good.
They did clean out the stops. I mean, yeah. I bet a lot of people that were expecting, that were quite confident that we're going to get another move higher. I was among them because the move lower was clearly corrective.
Yeah. I got taken out at, on that spike.
Yeah, so, I mean, trust me, you were not the exception, right?
Yeah.
So, yeah, they cleaned out the table, and then, as it usually happens in this case, after the market is, devoid of anybody that actually has not a mental position, but an actual position, then the market is free to move in the opposite direction.
Yeah, the market will shake out as many as possible before the move they're looking for occurs, then most likely without them.
Yeah, exactly.
That's my market. That's what I think of Mr. Mean.
Yeah,
market.
and I think that this chart and the recent price action is a testament to exactly what you just described.
Yeah.
So okay, I think we covered quite a lot of markets today. So more tomorrow, right?
More Tuesday.
Tomorrow, yeah, Saturday. You know what I'm suffering from, right? I came back from vacation Wednesday night, and I still feel that it's early on the week because I just worked Thursday and Friday.
Oh, that's right. Yeah. All right. Well, you'll get back in sync with working at the factory, and I just want to thank all you guys for hanging out with us, and we look forward to having a great shortened week. We'll see everyone Tuesday. Like Blake said, if you're on the fence, stay on the fence, and there's going to be a great opportunity to come in with a great deal in the next couple of weeks. So you're welcome. Remember, okay? Hey, what do you say? Remember what? Don't just count your silver coins and
Also
your Krugerrands. Huh?
Also count your gold ones.
Yeah, that's what I'm saying. Counting your, you don't just be like Midas and count all your precious metals. Count what's really count what's really precious.
Worthless piece of information. You might have like Krugerrands and golden eagles in the US as usual coins for storing value.
Yeah.
In Europe, it is St. George's coins.
Oh, okay. How about St. Gaudens? Is that a European coin?
What?
Gauden. So you call it George's. I thought they were Gauden, Gauden. That's a gold coin.
George, St. George's.
That's what they are? Okay. So yeah. I for 30 years I've been calling it the wrong thing.
Actually, I'll take one out and show it to you live on Tuesday, so you know how it looks.
All right, and include your address.
Yeah, of course.
All right, so guys, what's really precious is the time that we have, because money comes and goes and time is gone forever. Make it count, and thanks for spending that most precious currency with us here at ForexAnalytix. So adios, have a great weekend, and we'll see everyone on Tuesday. Okay, adios. Have a great weekend, Steve. Great to have you back, buddy.
You too, Coach. Have a great weekend, extended weekend, everybody.
Okay. See everyone. Good luck the rest of the day.